Hi, folks. Dan Bird here with the daily scan for April 17th. This is going to be a quick one because I have an event I have to get to. So, whose move is it? The Bears have been in control, but are the Bulls getting ready to take back over? We shall see soon. I talked last night about Netflix, and it looks like Netflix beat earnings. So, I'll look at that in 1 second. As always, I am not a financial advisor, so this is meant for educational purposes only. Nobody knows what the market or any particular stock is going to do, including me. So let's take a look. First, let's look at Netflix. There we go, up $43 after hours, up almost 4.5%. So it looks like they beat. Don't know if the conference call is going on yet or not, and what they will say about guidance. That might be very important. But I'll come back and check this again before we leave tonight and see what happens. This could set the stage for next week, and maybe the Bulls will be back in charge again. Remember that options expire today, and Max Payne usually carries into Monday or Tuesday of the next week. So that bullishness from Max Payne might actually start on Monday or Tuesday. We shall find out soon after Easter. Hope everyone has a nice weekend, nice Easter. Let's go back and take a look at what happened today. On the homepage, the market bias ticked up slightly, so getting a little bit of bullishness, slightly, very small amount. We shall see if that carries forward. The S&P didn't do much, black candle today, so it ended lower than it opened. And it's still got a lot of work to do. It's got to get above the 21 is the most important level. So, and of course, it still has the death cross. NASDAQ 100, same thing, looks almost identical. Bitcoin, I think, did pretty well. Bitcoin actually went up slightly today. I'm going to, let me see something here. These are 1 year also. I might make Bitcoin a little closer in so we can see it better. Like something like 7 months. Yeah, that might be better. So I'll put that on there. So you can see Bitcoin went up a little bit today, and it's above its downtrend line. So that is very positive for Bitcoin, even though it has the death cross, as I talked about. For those that are interested, I talked all about the death cross earlier this week and showed you examples of what happens. And typically, death cross occurs right when there's a rally. Sometimes it continues after the rally to go down, but not always. Sometimes it just keeps going up. So you can check out that video from earlier this week. All right. What else? Russell 2000. How's that doing? A little bit of a gain today. So a little bit of fresh shoots coming out of the ground, trying to bloom. Maybe Netflix is what is going to do it. We'll see if Netflix holds up through their earnings call. That should be interesting. All right. By the way, next Tuesday, I'm going to do a technical Tuesday. I've already decided what I'm going to talk about. I'm going to talk about using multiple time frames to figure out entry points. So that one should be interesting. So stay tuned for next Tuesday. So the market bias, market bias, you see there's more green ones, some red ones, some green ones, but more green than red. So that's good. We did get the death cross, though, here on the Dow. So it finally joined the party. So it also has a death cross. And the interesting thing about this is if you look over here, the short-term trend continues to go higher. The medium term was going lower, but it has now perked up and starting to go higher. And this is usually how the sequence works. Short term goes first, then medium term, and then the long term. And you can see the long term has just been in nothing but a downtrend. But these two right here are starting to give us maybe a little bit of hope that we might actually be in for a rally here, at least for the short term. So watch that. We'll see how that goes. Let's go to the charts page and look at the Bottom finder real quick. Bottom finder is now nicely above. So the 20-day is nicely above the 10%. It was at 0 at one point, and it is moving higher along with the market. So that's good news. And you can see that the VIX is moving lower, which is what we want. Now the put call ratio started to tick up a little bit, which means there's a little bit more bearishness coming back in, but it's not overly bearish, which is usually when you have reversals or bottoms. So until it gets way up here, we're not, it's not really a bottom. You can see when it was right here, this is the blue vertical line. You can see where the VIX was, and you can see where these were 200-day, 50-day, 20-day. All of this is on the website on the charts page. So you can always come over here and look at it. It's right under in the blue column. Right down here, bottom finder for the S&P and for the NASDAQ. I also have a sentiment chart here for the NASDAQ as well. So you can see the National Association of Investment Managers sentiment is 35. That is way, way below 50. So way down here. This is usually bottoming territory when it gets that bearish. So, and it's still down there. So this could indicate, so that's a sentiment. Down here we have the equal weight discretionary versus equal weight staples, and it is still heading lower. So that's implying that the defensive sectors are really outweighing the aggressive sectors. So in a bull market, we want to see that turn around and start to move higher. That's not happening yet. So bullish percent index is moving up, and there's the put call ratio, like I mentioned before, starting to tick back up again. So all of this for the sentiment indicators, I might put the University of Michigan in here too. I think that would make sense. We also have a rate of change indicator here. So I'm just going to look at that. I haven't looked at this in a little bit. So this is since 2009, this is the uptrend on a weekly chart. You can see we came right down to the bottom of this trend. This basically is the secular bull market. So this is where we should expect it to come down to. Didn't quite get there, actually. A little bit above it, and then started to move higher. So just like in 2022, COVID, 2018, the last trade war right there. So that's usually where we'll get to in a secular bull market, and then we'll start to recover from there. But here's the rate of change. So 1 year rate of change is starting to tick up. The 6 month is starting to move up, but it's below 0 still. And the 3 month was moving up. You can see the 6 and the 3 are actually starting to move down a little bit. And this is the 1 year up here. So the 1 year takes longer. These are the ones that actually move first, the shorter ones. So rate of change actually is heading back down right now, but the 1 year is going up. So we'll keep an eye on that as well. All right, let's take a look at, I want to show one more thing over here on this on the charts page. And I want to show something based on what one of the subscribers said made a comment that the inflation in 2020, or the market going down in 2022 was a result of COVID. But that is really not the case. Now, COVID did have something to do with it, but the market started going down because interest rates started to go up. That's why the market started going down. And interest rates went up because the money supply increased. So first, let's look at the money supply, which is right on the website right here, M2 money supply. And what you'll notice is right here is the pandemic. So money supply, this goes back to 2004. Money supply, this is basically the normal trend right here, this pink line. And you can see what happened during the pandemic when the government was printing money, sending it out under all kinds of different names. One of those names was Inflation Reduction Act, which all it really did was increase inflation. I thought it was ironic they called it that. It basically shows that people in Congress have no idea what causes inflation. It's printing money that causes it. Of course, the supply chain issues had a little bit to do with it in the beginning. And that's why they were saying that it was transitory, because they knew that was temporary. But this whole period right here was supply chain related. But from here on up, this is all money supply. This is the government printing checks, sending them out to people, and continuing to come up with new programs that would pad the pockets of people in Congress, both parties, by the way. And that's what caused inflation. You can see inflation right here, 2021, 4.7, 2022, 8%. And 22 that's when the market started to crash. So that's money supply. The other one I wanted to show is cumulative inflation. So this right here is 34-year cumulative inflation. And you can see over 31 years, inflation was 108% cumulatively. That works out to about 3.5% per year. But because of printing money through this period right here, it went up almost 21% in just a 4-year span, from 2021 until 2025. This 4-year span, it went up 20%, almost 21%. So that's 5.25% per year over that 4-year period versus 3.5% over 31 years. So again, inflation is caused by the government printing money. This was all a result of the government printing money. In 2022 was when the Fed stepped in and said, we have to bring inflation down. There's peak inflation right there, right in the dead center of 2022. So the Fed said, we've got to bring inflation down. So they started to raise rates, and they raised rates faster than any other time in history. So let me show you that. I'll show you the rate, Fed rates and recessions. So here's, you see back here, the previous Fed rate hikes back here. And this one here leading up to the financial crisis. This one back here, they started raising right here leading up to the dot-com crash. Right here leading up to COVID, which nobody really saw coming, but it all kind of fit together. And then this one right here, starting in 22, this is why the market crashed. You can see the market right here going down, and you can see the increase in Fed rate hikes. Fastest Fed rate hiking cycle in history. So they were moving rates up faster than they've ever done before, and that's the reason the market went down, not because of COVID. Now, COVID, was kind of an ancillary factor, but inflation occurs because the government prints money. All right, so that really is the reason for this crash in 2022. All right, so that's pretty much it for tonight. I hope everyone has a really nice Easter holiday. The market's closed tomorrow, so we can't make any money tomorrow. Of course, we can't lose any money either, which is nice. I'm going to take a look at Netflix one last time, see where we are. Netflix is still up almost 4.5%, 43.27. Let me refresh this, Yeah, so it's still up. That's great. Don't know if the earnings call has started yet. We'll see what happens later on. So keep an eye on this after hours. This might set the stage for Monday and the rest of next week. So next week might actually be a bullish week. So let's hope for that. So everyone have a really nice weekend, and we'll pick it up again next week. Thanks. Take care.